following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. We're going to take a look at the euro really quick here. We're going to blow up the weekly. And yesterday, if you guys caught some of the show, we were kind of focused on this for about a good 20 minutes. And the volatility of the euro's gotten a little higher than normal, without question. Our weekly profile has expanded. And we knew this coming into this profile when we adjusted down below the previous profile. So we were predicting decent volatility in this. And, you know, a lot of folks are saying, Eddie included yesterday, just want to follow up on the mantra here for this, that, you know, the euro, this is our daily view, the euro should more than likely have shown a little bit more with the Greek tensions and the Mexican standoff, or however you want to call it, a little bit more weakness. But, you know, one of the things I'll say is, you know, you never can predict. I mean, and again, the theory and the logic behind what he was saying is so true. I mean, you know, it's kind of showing its hand that, you know, straight to kind of act like it's got Teflon on it. But all things considered, you know, they can pull the rug out of these things pretty quickly, and a lot of people are thinking that now. I mean, you start reading the news stories, you look at the TV, you know, it's when people start running for the door all at one time, I mean, this thing could really get ugly. So keep that in mind. Make sure you have your stops in. I'm still looking at the euro. Again, you know, taking a look at this, we're kind of in the balance area in the weekly. That 114.68 area up top is going to be the maximum resistance area without question. But as we look at the daily, I'm still looking at it, and we've been talking about this for a while. It's been a little nerve-wracking for me, but this fence, if you will, around 112.25 is going to be something I'm just paying attention to. And, you know, you got to relax your stops a little bit more in times of high volatility to not just get clipped out of some of these trades that you may be very right in. But I'm looking at 112.25 as the fence on this and trying to hang in there. If I looked at this from a classical technical analysis standpoint, I would, you know, say that, you know, we've kind of rallied up. We've reached a plateau. We're kind of churning around, building K's, as Tom would say. But, you know, I'm looking for the bottom to drop out of this thing again. And I'm looking at any daily closes, which we haven't had since June 5th, to have closes below this 12.25 area. Okay, and I'm writing something down that I'm going to come back to. And as we look at this, and as we start migrating back down below 12.25 or 112.25, that's the area that I'm going to be looking at on a daily close to start looking at that as a resistance area with stops above based on my appetite for risk. Is it, you know, has it been something I've been, you know, willing to jump into yet? Yes. I mean, I've actually played this on a short-term basis and gotten stopped out. I mean, you know, getting back above 113 is, even on an intraday basis, is a harrowing experience when you're looking at a volatile instrument like this, and it's about 70 pips against you. So you got to take the say uncle medicine every once in a while on trades like that. But I'm still looking at this as a short, believe it or not, and I'm looking at targets down below 106 ultimately, but initial targets of 108.70 on the euro. The yen, again, it's very good case in point situation here. Looked at the 124.61 area as some form of support on this, and then we try it again down below on the next profile down. You know, I'm still a big fan of going long the or the devaluation of the Japanese yen against the U.S. dollar. So I'm looking at the 123.29 area, stops down below, relaxing these a little bit because the currency volatility seems like it's going to be here to stay for a little while. So you're going to have to kind of keep that in mind, maybe trade a little bit lighter. And when the position possibly starts going in your favor, then, as we've talked about many times, the mark of a good trader is to add to a winning position and to maximize the move. So again, starting out light, not a bad idea. Getting a core position developed if it goes in your favor, but if it doesn't, you're kind of light and you're taking the stop outs when you're supposed to. I think I hit the wrong key there. Now we're looking at the Australian dollar. All right, so let's just go back to the U.S. dollar where we're talking about currencies. As we look at this, we're looking at the September contract on this. And again, I'm not a big fan of shorting the dollar. I know we've had some technical damage. We've been hanging around down here. But now we're looking at unfair lows on the weekly, 95.30. You know, what do you do with the dollar in this instance? I just don't think you short it. I think you got to, you know, stay off the short gas pedal here and wait for some new profiles to appear on the daily. I'm not exactly a huge fan of acting down here without some concert information on the daily, and that would mean, especially within our scanner, to look for going into our forex area, going into our futures area, finding the U.S. dollar index futures and looking for some peel backs that may start happening in that orange peel back area on the U.S. dollar. And then you can start thinking, all right, I'm going to get a new daily profile more than likely. I'm going to have some new inflection points to orient stops around. And that's kind of the way I'm looking at the U.S. dollar right now. Let's go into the S&Ps really quick. We're just going to hit the usual suspects here. September contract. If you've been watching this show, we've been very, very heavy-minded on the short side on our S&P futures. And you know, why is that the case? That's the case because as we go into these breath situations, you've been living in a cave and haven't been watching the show. We had our weekly breath rollover for the first time since October 24th on June 5th. Looks like it's here to stay. Had a weekly close and another weekly close after that. That's our weekly situation. The daily situation, the whole globe is basically rolled over. And what does that mean? That means that on an intermediate basis, there's only one index really the Thai Set 100, that's flip-flopped around all over the place, and it always seems to do that. Very difficult index to trade, actually. Shanghai 180, this is the kind of the power move, and we're going to talk about the Shanghai a little bit, but you know, the whole globe is kind of rolled over, and as we look at the S&Ps, we're pretty much breath negative across the board, and that means that we're passing on buying support, just like we passed before on buying support around that June contract 2068. We actually hit it almost to the tick and rallied significantly. You know, we passed on that rally. We're trying to find some areas to short. We got some new inflection points on the September contract, and we're looking for now some good possible follow through here. And you know, where's the target's going to be ultimately. I think the technical damage is going to happen, and we're going to be below 2060 before you know it here. So you know, we've kind of had a big pullback here in the last couple of days, and one of the things we're going to keep our eye on is our short-term breath. Going back to our kind of speedometers, odometers here, we're going to keep our eyes on this. And remember that, you know, our daily breadth profiles here, as we look at this, have really been the kickstarter to this whole move. And when I say that, we've been looking at passing on longs for a long time, actually. And when we go back to the first of the year, January, this past year, we haven't really gone anywhere. And this last move up above profiles on the daily and weekly, we haven't shown a lot of conviction because the daily breadth has really been all over the place. So just to do a little bit of review there, now we're starting to finally see some movements, and we got mosquitoes in our office again. Sorry about that. We're starting to see some movements and some breadth coinciding now in the very long term, being the weekly. So that's one of the strongest signals we can get, and we've got to pay attention to that. We've got to still now look for resistance to sell and look for breakouts to sell, breakdowns to sell, excuse me. All right, so we beat a dead horse pretty good there. We've been talking about that for a while, but we can't, in my opinion, we can't really say that enough. I mean, these are opportunities that don't happen very often, especially for shorts on the indices, being the S&Ps. On that same note, we're going to look at the 10-year, and we talked about the inflection points. In fact, yesterday, not really getting too excited to trade the range, the upper part of the range, 125.24 up top. Now, why has that been the case? We're looking to buy breakouts, again, on the treasuries when they happen. There's two reasons for that. One of them is I'm not so sure that the treasury sell-off is going to be a long-term situation, and I've been saying that for a while. So I'm looking for breakouts, and I'm looking for support still on the 10-year and the 30-year. Now we're getting that breakout. Hopefully we'll get a close above profiles today. That has also been coupled with looking at the S&P action, looking at the breath rollover on June 5th, finally on the weeklies after a 9-month waiting patient situation for that to happen. And, you know, usually you will see some kind of flight to safety when the market gets a little, VIX gets a little higher, you've got currency issues. It's kind of interesting to me, though, that the treasuries aren't rallying actually a little bit more. Now they're just doing a little bit of a technical damage play here on the dailies. The weekly situation is still, you know, not exactly the ripest situation in the world on the long side. But again, I'm looking at support now at 125.24, considering that we may get a close above on the daily on the 10-year. So that's it's kind of a wait and see right now. I'd love to see a close above that profile. Gold, you know, kind of amazing actually to me. You know, we've talked about this just being range bound, getting below 1170, getting back above 1196. Amazingly no interest in gold right now either way, just kind of seemingly critical times here, but nobody's paying attention to that. Going into crude oil, got a little bit of a short signal here on the daily situation, 60.50, closed below, went back and retested. I think we could explore the fair auction again down to 57.40. That's what we're looking at on there. Stops above 60.50 based on your appetite for risk. Guys, we're going to be right back. We're going to cover some stocks in play here, and stay tuned and join us in 4 minutes.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I think we've got a caller. David, are you there?
Yes, sir. I'm here.
Hey, how are you today, David?
Okay, thanks for taking my call, John. Where are you?
Great.
Where are you?
Right now, I'm in the Philippines. I had actually booked a ticket. Literally took my finger off the buy button today to get back on the east coast of the States over there, and literally in 5 minutes, somebody told me they were coming to stay from the 25th to the 28th over here, which is the day I was leaving. It's a company we're doing business with, so I had to kind of rearrange that. But currently I'm in the Philippines.
Okay. Well, the reason I'm calling, I wanted to ask, what do you think about the oil markets right now? I'll just go for a week. I'm not even thinking long term. I'm thinking immediate term, if that's okay.
Yeah. Okay. Well, would love to talk about that, actually. It's an interesting topic. On a long-term basis, I think oil is more than likely going to come down. On a short-term basis, I think oil has a lot of headwinds to just even rally much at all right now. And what I mean by that is I think we're going to be in a trading range. So I don't think we're going to have any big down moves immediately. I don't think we're going to have any big up moves immediately. So what's kind of left? What's kind of left is, in my opinion, trading the profiles. I think we're going to be somewhat range bound. There could be some exciting news every once in a while here, but I think, and let me pull up our weeklies here, you've got some inside bands between 60.50 and 57.40. You've got some bigger support down at 56.92, and you've got some other upper limits around 62.28. So, that being said, and I'm showing our weekly profiles right now. I just think we're not really going to go anywhere in oil, and I think somebody can make some decent money selling some premium if that's the case, or doing some range-bound trading. If that makes sense.
Are you looking at the /CL? Is that what you're looking at?
I'm looking at the June contract right now.
Okay. I just want to make sure.
Yeah. Is that? I mean, is that something you wanted to hear, or is that something
No,
that?
I wanted to just talk.
Okay.
Learning. I want to think about all of it, get your opinion, and that's
yeah, I mean,
it's up. I'm showing.
Yeah.
I'm sorry. I'm showing it's up 34 cents this morning.
Yeah, I mean, right now I am showing oil, up 34 cents right now. I'll tell you right now, automated systems are automated systems. We got a short signal today already on crude oil. Stops are going to be above that 650 area. We're looking for targets down below 57.40 on this particular system. So that's kind of where we're at right now. And I don't see any major movements in oil coming, anytime soon. I think the market's just going to churn around a little bit here.
You said you have stops above what, 650?
60.50. Yeah, I mean, I've kind of got a generous stop up there around 61.20, 61.40 up in that area.
Okay.
But I think the flavor of the day right now is the currency situation. I think crude oil is just, again, at best going to probably just churn around here. I don't think in the near term, I think we're not going to have any massive pullbacks in crude oil, but we're not. I just don't see any major rallies happening either. So therefore, we kind of have to just kind of look at the range-bound situations and pick the battles. And I'm not the only person thinking this right now. So.
Okay. Well, thank you for your time.
Yeah, no problem. Thanks for calling in, David.
Okay, I'll listen more. Thank you.
Okay, thanks. Somebody is asking about VALE. And let me pull this up here. This is a $6 stock. I want to take a look at this. I don't know what this company does at all. That's the cool thing about technical analysis. Sometimes it's better to not know what a company does. But this is our weekly view here. We've had some situations that we're going to talk about this when we come back from break. I didn't realize we were creeping up on our next break here. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We were taking a look at VALE. I'm assuming it's an iron ore situation. You know, I don't have a strong opinion on this either way. You know, the Australian situation in the iron ore market has obviously come off tremendously. We've had some short squeezes lately, but I don't know how this thing plays out. I don't know how this stock plays into it, so I apologize if I can't really give you a consolidated answer on this one. So we'll move on a little bit here. Let's take a look at Goldman Sachs really quick. All right. Says, I read something, you know, I don't understand this. This is like the riskiest business to get into, but I guess they're in the risk and controlling risk. The lending business on a very they call it micro lending over here. It seems like nobody ever wins. It's very hard to control. It says Goldman Sachs is going to get into that. Here's the situation on Goldman Sachs: 210.68 unfair highs. This is one of the XLF components that have just been murderously powerful. I say murderously because it's caught me short a couple of times in the past. I don't like this stock. Here we go. So as we look at this, pre-market 211.69. Again, not not the stock still to short. We'd have to start seeing some closes now below 210.68. That hasn't happened yet. You've got better shorting opportunities. I had an email about this, kind of stating something about the also about the micro lending situation. Is that a damaging event for these guys? I don't think so in general. But technically speaking, not a lot of reasons to get on the short side of this stock yet. We always use the scanner to try to pick relatively weak stocks in a strong market. This is a relatively strong stock in a market that's kind of been sideways for a long time. This is IBM. This is one where we have, in the last couple of days, had some pretty serious volatility, but 167.35, I think you can still orient stops above there. I think this stock could have some serious downside on it. That's the weekly situation. 167.35 stops above. Yeah, I mean, Goldman Sachs. We used to try to, when I was in Chicago, we had one customer. We did some DVP stuff, delivery versus payment on the clearing side to Goldman Sachs. What a bunch of assholes. I mean, my God, I don't know if I can say that on the air, but just very difficult people to deal with. Very, very difficult people to deal with in that company. I could talk a whole show about that experience. And nobody's had a different experience, actually. So it's just, I don't feel like I'm out there alone. Procter & Gamble, this has been one, had a nice little move back up into 79.60, 79.67. I'm reading it then, I'm laughing. 79.67, unfair lows on the weekly, long term. This is now the lid on this particular situation, Procter & Gamble. We're going to say, and you might be saying, hey, well, these things have come off pretty good lately. The market finally starting to show some cohesiveness on the downside. This is Johnson & Johnson. This has been one, we've been keeping this on the short radar screen, 98.08. Now you can lower your stops on this one on the short side. That's the situation on Johnson & Johnson. Let's go back to the gift that keeps on giving. Walmart, man, this has just been relentless. No reason to get out of this short trade. You've had a lot of reasons to add to it. Had that profile appear above price action a couple of days ago. This is just continuing to be the gift that keeps on giving. Some serious headwinds for a lot of U.S. companies right now. I'm pulling up some of the usual suspects just to kind of give some proof of concept on. That's not what I want to show. Yeah, actually, it was one of the ones I want to show. It was in the scanner. Hold on. Okay. Coca-Cola Enterprises, CC, that one was on the radar screen. CMG. Let's look how some of these have acted. These are ones that have just been on the scanner radar screen, the weak stocks that we just want to give a little proof of concept here. Chipotle. Again, this is profiles, boom. Do you still short this thing? Things on our lows go lower. I mean, this is, again, you got a new 608.42 down below, something you can focus on, orient stops above. Big time stops have to be above 622 on CMG. Not for the faint of heart. Let's take a look at Amazon. Had some emails about this one. Man, all over the place past couple of days. I'm still looking at this. I'm still looking for a retest of 445. I know we had a profile appear above price action. We start getting a little bit more cracks in the armor, get the S&Ps below 2060 on the September contract. I think you'll see this thing down at 400. But that'll be kind of all you could more than likely hope for on Amazon. Starting to get below profiles for the first time here on the daily too. So short-term traders, stops above 425.28 and above 435.11 based on your appetite for risk. I think Amazon could finally come back and start testing some support areas. Finally. Let's take a look at those new crop beans. A little bit of a rally back up into that resistance area. We talked about 913. We hit a high today of 913. Backed off a little bit back into 911. I still think you can orient stops above there. I think we're going to come back and just implode below $9 a bushel on new crop beans. Keep your eye on that. Make sure you keep your stops in too. It's okay to get stopped out of a trade and get back into a trade. And let's just keep going down the list of some of the stocks that are on our radar screen. These are kind of double nose on the long side here. Again, Hewlett Packard, let's take a look at this one. This one's interesting, HPQ. And remember, guys, we have, as it stands right now, I'm going to go back into, actually, I want to leave this up for a second. Well, let's just, actually, we can access it here. I'm sorry. Got our breath up here. On the weekly, now we've got 166 stocks trading below profiles on our weekly breath, 115 trading above 214. That's a pretty big meaty area in the middle. On the dailies, only 73 stocks in the S&P are trading above profiles here. And we've actually got another area of supply coming online for 17 of those stocks of those 73. So that's going to decrease down into the 55 area. That's relatively bearish, guys. Delta Airlines, DAL, let's take a look at this one after HPQ. The reason I'm pulling this up is, this has kind of come down into support. But as I look at this, I'm looking at this as maximum kind of breakdown situations. And, past couple of days, we, started, have a profile appear above, that's bearish, went and tested it. Now we're looking at, in my opinion, a little bit of a flush opportunity here below 3177 on Hewlett Packard. Why is that the case? Because I'm looking at the S&Ps, and I think the index could drag this down even farther, and some people would more than likely start covering HPQ if that's the case. Let's take a look. And I was just getting ready to pull up Delta Airlines here, DAL. All right, Delta Airlines started having the technical damage again, getting back below 43.63. Let's take a look at the daily situation. Now, as we talk about all the time, we have a profile appearing above price action. On a probability standpoint, that's a very, very bearish, historically bearish situation. Delta Airlines, therefore, stops above 42.05. We may get a retest of 42.05, but I think you could take a look at this now as some clear sailing down south on Delta Airlines. Scanner picked that out, put it on my radar screen. Let's take a look at farther down the list here. Lowe's Corp, again, this one's been on the short list for a while. I'm pulling up stocks that are trading below weeklies and daily profiles. Lowe's Corp. There we go. The daily, the weekly situation stops above 40.73. Again, I think the market could drag a lot of these down farther. 40.73 stops above on a long term, and now on a intermediate term, you've got another lever here, 39.72. And again, I think some of these stocks could head much lower. Let's take a look at Coca-Cola. Wow, sea of red now. This one's kind of been sitting here for a while. All right. Take a look, folks. $40 stops above. Could have some more rides down on this. Here's a daily situation on Coca-Cola. Things on the lows go lower, breaking below these recent lows. All right, let's go back to the euro. We've been kind of staying away from this for a second. Again, just sitting right there around the 112.25 area. I'm looking for this to go down. Targets at 108.70. Make sure you put your stops in. Long-term stops have to be above 114.67 if you've been watching this show. Then you got to be willing to say uncle up there reassess things on a long-term basis. Let's take a look at our DAX. Okay. Inflection points here. Haven't had a close here. Inflection points now, bottom 109.34 on the DAX. We've reached that. We haven't had a close below. What do you do with this? I think we could have a little bit of a bounce in the DAX. I think some global markets are still going to sell off. But again, you got a little bit of a trading opportunity, kind of snuck down below there and closed above 109.34 on the DAX. I think you could leverage some stops below for a little bit of a bounce opportunity on the DAX there. Stop some people out on this trade already. I think we could have a little bit of a bounce. Let's take a look at the Shanghai. This one's a kind of an interesting read because as we look at this, we're going to go into our index section or index features. Shanghai 180, not showing a lot of cracks in the armor. Short term, just starting to roll over a little bit. On a long-term basis, at the Shanghai 180, there are 4 stocks trading below profiles only. Let me repeat that. Shanghai 180, 4 stocks trading below profiles on our weekly. On our daily, we've got 19 stocks out of 180 stocks. So what are you supposed to do with that information? I mean, as we looked at this information before, that allowed us to buy the dip on that 44.15 area on the Shanghai. So right now, again, we use the 240s a lot of times to try to regulate the trade. 240s, again, we're supposed to be out of the trade right now on the long side, looking for support. We're looking for a new profile to appear, considering the breadth is what it is. Hopefully a new profile up here, give us some new inflection points and be able to hopefully find support on this thing again. Again, I mean, it's not over till it's over. And the Shanghai right now, breadth situation, most of the stocks are still breadth positive. Got to always keep that in mind. All right, take a look at Apple. I had some emails about this one. All right. What do you do with Apple? Here's the long-term situation. Still in that range. I think you still got to buy this thing around 123.79. Again, I'm going to blow this up a little bit. It is what it is. You don't short it. That's what you don't do with Apple. All right, let's take a look at, let's see how much time we have left. 20 seconds before the break. Let me pull up here. And I'm stuck. Hold on. Here we go. We're going to take a look at AVP when we get back, guys, after this last break. And we'll be right back in 4 or 5 minutes.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. You know what I did? I went to the scanner. I did a sort for. Let me just reset the sorting here. I did a sort for stocks sitting at the bottom of their profiles on our daily. I mean, this is pretty astounding. My God. All right, so there are this many stocks sitting on the precipice on our daily profiles. That's amazing. Literally amazing. All right, so what we want to do here, we're going to take a look at some of them like ADP that are sitting on the bottom of the weekly and daily. Similar situation, first bar. Let's take a look at ADP. Man, that's never seen that before, actually. You could take that as two different things. I mean, since the breadth is very negative on the long term, and you know, we could have some rallies, but again, it's going to take a little bit of a rally to get the weekly breadth turned around now. With that many stocks sitting on the bottom of their profiles or directly below profiles in the same 10% range, the way we define bottom is you take the range of the profile and you just multiply times 10%. If it's in that variance area, we consider that bottom. So let's take a look at ADP. Yeah, this is This one, I'm glad we pulled this up. I mean, this is kind of interesting here from the short side, actually. This is one of the ones, and here's a daily kind of making the same situation. Stops above 83.15, 83.42 on ADP. Scanner picked that right out, and markets could, drag this thing down. Pre-market, we're trading 82.92 on ADP. So let's look at a couple others. I'm just going to I'll tell you what I'm going to do. I'm going to look at the bottom on weekly and daily, and I'm going to show only matching results. Boom, here we go. That makes it easy. Texas Instruments, Texan, TXN. Let's take a look. Oh, wow. 3 inflection points. My goodness, let me look at this one. TXN. Not TXNN. All right, so here's the reason why it showed triple bottom. Okay, we're at the bottom of the 240, which is not something I'm terribly interested in looking at here. We've got 52.83 sitting the bottom of our very wide profile here on Texas Instruments. And on the weekly, kind of done a little bit of a reversal here, but I'm looking at this on a long-term basis. Now, we've kind of stuck our head above this weekly on fairly 52.91. It remains to be seen what's going to happen this week. Obviously, is it Tuesday? I think it is. It's hard to, it's always, days are mixed up over here. Trading at night and during the daytime. Here we go. So again, a little bit of a reversal here. So again, you'd like to see a daily close below this profile, 52.83 on the daily, 52.91 on the weekly, and that would be something. That would be something I'd be interested in taking a look at this from the short side again. We've had a little bit of a pullback here on Texas Instruments, no mystery. We kind of explored the entire fair auction from 56 down into 52.91. But remember, I'm looking for the S&Ps to drag some instruments down, and we may get a little bit of a flush here on Texas Instruments. Yeah. All right, guys, we've got about 10 seconds left here. We're going to take a look at one more. I don't think we have time. QEP Resources, we're going to take a look at that one. Tell you what, you guys stay tuned. Larry Pezzimento's next. It's been John Logan, Global Market Pulse. Stay tuned all day to TFNN. We'll be back again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.